Joining us now is Chris Murphy, Susquehanna's co-head of derivative strategy. I love illiquid markets, Chris, because bigger price moves, more to talk about.
You're right. You're right. I mean, it could be more exciting at the end of the year. We hope it is. I mean, I'm stuck here most of the days until the end of the year, so I wouldn't mind some excitement. But yeah, probably the highest volume day of the year till the end of the year. And then with those expiration notional stats, sure, it is the biggest notional expiration all time. But if you think about year over year, more options trade than ever, and S&P is at all-time highs. So really not that much of a surprise. It's the biggest notional expiration ever. I think it'd be bigger news if that number started to drop ever.
I'm going to put you on the spot because you're so good at thinking on your feet. If you look back on 2025, we talked a lot, maybe last year, maybe earlier this year, about zero-day options and so forth. What would you say was kind of the takeaway from options action this year? We're about to talk later in the show again about prediction markets and the rise there. What would you say we learned this year vis-a-vis, the options market? Just a question to throw out there.
Well, I think the story of most of this year was low correlation. So, the index products themselves were not moving a ton, and you saw massive moves in underlying stocks up, down, not just the AI names. You guys discussed Nike before this, the home builders, all these big earnings moves. So I think the story of this year has been, idiosyncratic risk. And, as the options markets get more and more liquid every year, the ability to play individual stock moves and also take advantage of much higher individual stock volatility levels through selling options. That's been the story, and I would expect that to continue into next year. And like you said about exciting markets, when things are trading with low correlation and it's a stock picker's market, that's better for us and it's better for your show.
Yeah, and hopefully people pick the right stocks, but it's really hard to do in those kinds of situations. Two more quick questions for you. One, what is the options market signaling or telling you about positioning into next year? Because the forecast from the street, I'd love someone to pull the data on this, seemed to me one of the most optimistic we've had in some time.
Well, when we're watching the options trades, I think we would kind of call it cautiously optimistic. Obviously, a lot of tech kind of took a pause recently, but we're seeing very consistent, mostly call spread buying in, let's always, of course, focus on the Mag 7 names. People are saying, look, maybe AI is a little bit over its skis. Maybe I want to reduce my underlying positions a little bit, but I certainly don't want to miss a rebound, a breakthrough, any more upside. So certainly the most popular trade we've been seeing into the first quarter of next year has been taking advantage of attractive call spreads because of elevated call skew in Mag 7 names. So that's been the focus on our desk recently.
Okay, and finally, what do you make of this whole move to 24/7 trading? Is it synthetic? Is it real? Is it affect things like, the time of day that options expire and so forth?
Well, I mean, I think that the liquidity is still most likely going to be in the U.S. hours. I think it's interesting for me when I see, for example, an aggressive after hours or pre-market trade in the VIX or the S&P, because that's a sign to me, this person does not want to wait until the open. There might be more information in
Someone
this trade.
knows something, yeah.
Yeah, exactly. I'm hoping to not be trading at after bedtime. So, I think it's mostly going to be trading mostly during the same trading hours.